welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 24th, 2024, and we're diving into Keurig Dr. Pepper's third quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Keurig Dr. Pepper's latest performance and strategic moves.
Let's start with a brief overview of the company and the report. Keurig Dr. Pepper, a leading beverage company, has just released its Q3 2024 results. The company has reaffirmed its fiscal 2024 guidance and announced an acquisition in the energy drink space. John, what are your initial thoughts?
Well, Keurig Dr. Pepper has shown resilience in a challenging market. Their reaffirmation of the 2024 guidance and the strategic acquisition of Ghost are significant highlights. It indicates their focus on growth and diversification in consumer-preferred categories.
Revenue and profitability overview. Let's delve into the financials. Keurig Dr. Pepper reported net sales of $3.89 billion for Q3, a 2.3% increase from last year. Despite a muted operating environment, the company managed to grow its net income by 18.9% on a GAAP basis. John, how did they achieve this?
The growth in net income is impressive, driven by a combination of volume mix growth and cost discipline. The adjusted EPS of 51 cents reflects healthy operating income growth and a lower share count, although it was partially offset by higher interest expenses.
And what about their cash flow?
Operating cash flow was robust at $628 million, with free cash flow totaling $503 million. This strong cash generation supports their strategic initiatives and shareholder returns.
Segment performance. Now let's break down the segment performance. The U.S. Refreshment Beverages segment saw a 5.3% increase in net sales. What drove this growth?
The growth was primarily due to a 4.0% increase in volume mix and a 1.3% rise in net price realization. This segment benefited from recent partnerships and strong base business trends.
On the other hand, U.S. coffee sales declined by 3.6%. What were the challenges here?
The decline was mainly due to a 6.3% unfavorable net price realization, despite a 2.7% growth in volume mix. The at-home coffee category remains muted, impacting K-Cup pod shipments.
And how did the international segment perform?
International sales increased by 0.4%, but on a constant currency basis, they grew by 6.5%. This was driven by higher net price realization and volume mix growth, with broad-based market share gains.
Strategic initiatives and future outlook. Let's talk about Keurig Dr. Pepper's strategic initiatives. They've announced the acquisition of Ghost, a disruptive energy drink business. How does this fit into their strategy?
This acquisition is a strategic move to strengthen their position in the fast-growing energy drink market. It aligns with their goal to evolve their portfolio towards growth-accretive and consumer-preferred spaces.
And what about their outlook for 2024?
The company has reaffirmed its guidance for mid-single-digit net sales growth and high single-digit adjusted EPS growth. CEO Tim Cofer emphasized their progress on strategic goals and cost discipline, which are crucial for a strong finish to 2024 and a healthy 2025.
Key takeaways. In summary, Keurig Dr. Pepper has delivered a solid performance in Q3 2024, with growth in key segments and strategic acquisitions. Their reaffirmed guidance and focus on cost discipline position them well for the future. John, any final thoughts?
Keurig Dr. Pepper's strategic moves and financial discipline are commendable. The acquisition of Ghost and their reaffirmed guidance reflect confidence in their growth trajectory. Investors should keep an eye on their execution in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Keurig Dr. Pepper's performance in the comments below.